And let me confirm. Hang on a sec here. Okay, so let's get started. It's February 1st, 2018, and I want to welcome you to the BiddyCash crypto training course, our group training session. And it is February 1st, 2018, and we're in February already. I can't believe it. Time is just going by so quickly. So I want to welcome everybody. For people who are not here and who are listening to the recording, hopefully you'll get a lot out of this. And so what I'm going to do is I'm just going to just let everybody know my name is George Wilson. I'm the training consultant here for BiddyCash, and Jeff Long is actually tied up with some other things, so he will not be here tonight. So what we're going to be going over is we're going to talk about this week in review. So we're actually going to look at what happened this week. We're going to talk about what's going on with the markets. We're going to look at some FUD around Tether and Bitfinex and the India government announcement that came out today, which is affecting the markets. We're going to talk quickly about what FUD is. It's a terminology you're going to hear a lot about in the cryptocurrency space and how it affects the markets. Once we get through that, we're going to go into looking at TradingView. So hopefully all you guys have your TradingView accounts. What we're going to do is we're actually going to walk through. I know I got Christine, one of my one-on-one coaching. We actually went through TradingView, so it's going to be a refresher. So we're going to walk through TradingView charts, how to set them up. I'm going to set up a couple of standard indicators that you should have on your charts. And as we go into our other sessions, in the next few weeks, we'll get into more details about the indicators and so on and so forth. Then hopefully everybody watched the candlestick video that we put in the Facebook group. We'll just have a quick Q&A about candlesticks if you guys have any questions. And then when we're going to get into types of orders, we're going to look at the GDAX platform, and we'll look at Binance as well. We'll talk about the orders, how to place your orders, and again, what types of orders you can place on those different platforms. So each platform has different ways of doing it. I can actually do Bitfinex as well, since I have the chart open and I have that. I don't think anybody we have is using Bitfinex, but we'll go through that as well. So first thing I want to do is I want to kind of pull up the chart here, and let's have a look at, I am going to pull up Bitcoin, USD, we're going to pull it up here on Bitfinex. Where are you here? USD on Bitfinex. Where am I missing it? There it is, way at the top. All right, so I'm looking at a 4-hour chart, and you can see that since January 6th, look at this steady decline on the market. And we actually hit a low here on January 17th of 92.31, and that was holding really well. We were getting some consolidation here, and then this morning you can see here with my little trend line here, we broke through, and as soon as we broke through that, we've been tumbling ever since. So the question is, where are we going to stop? Where are we going to end up? And again, right now it's battling the 9,000 range. It's at 89.28. We're looking at, again, hopefully we just have a bit of a flush below 9,000 and we'll get some recovery back up, but we still have a bit of consolidation to go, okay? So again, we really need the markets to settle down a bit. If I zoom out, actually I'm going to go to the daily. And again, if we look at the charts, and again, we look at the 1 hour, we're seeing that we're really on a downward trend. Over the last little while, we've been on a heavy downward trend. On the 4 hour, we've been, again, we're on a downward trend, and even on the daily, we're on a downward trend since around Christmas time, which we peaked out December 17th is when we hit our high, all-time high on Bitfinex. It was 19,891, just under 20,000. So in such a short time, just a month and a half, how we've gone from almost $20,000 back down to $8,900. So again, if we look at the chart, we're going to zoom out a little bit more here, and you can see that, again, we were pretty flat here, and then last year we went up significantly, right? And if we really look at this chart, it really is just a correction, right? It's really cooling itself off, and the market's cooling itself off. And again, it's just trying to find a spot to bottom out, which we are really close. Typically, we'll look, what I use when I'm checking out is I'll use Fibonacci retracement tool and take a low point, and I'll take an upper point up here. And let me just get rid of this thing here. And so typically when we're looking at markets, and again, we'll get into more details later. So when you're looking at a market like this, you typically have your uptrend, right? And when you get the top of that trend, you're going to get a retracement, right? And typically you're looking anywhere from this level here, which is 382 to 618. And so if we look at this on the daily chart, we are just about to hit in and around the 618, which we'll typically see a bounce. And I'll show you some past history of how that worked, and we saw the bounce at about the 618, anywhere between 618 and 786. So you can see that we're getting close. We could bottom out about 8,700, 8,500, could go down to about 8,000. So we could actually break through this and just break back up. But we are looking at potentially ending this retracement, and then typically looking for it to start going back up. Now, again, it's not going to go up like, right away. It's not going to go just a straight line up. So you're not going to get this, if I can get my arrow here. So you're not going to get this, a straight up. Typically what we'll end up seeing is something like this. We do here. I'm just going to do, hang on a sec. So we'll typically see something like this. So we'll start here. It'll come up maybe to 12,000, pull back down here, maybe come up here, come down here, come up here. So we'll see those kinds of movements. But now we're looking at, and again, I just want to kind of show you here. This is another tool that I use, but we can see that it typically goes up in 5 waves. So if we kind of start here, 1, 2, 3, 4, 5, and right up top there. And then we had our pullback, which we're looking at somewhat of our correction, which I'm kind of drawing out what we call Elliott wave. And again, this is something that I look at. So we go here, always retraces ABC correction, and then starts with our additional uptrend. So you always get your ups to a certain point, then you get your downs, and then we have our continuation. So as much as it's come down significantly, and we had to give back, we went up so quickly, we had to give back, let me get rid of this, some of what we gained, and we certainly did that. We actually, have come back $10,000 from our high, and it could end up being about 12,000 by the time we're finished. So, so let's talk about what happened this week. 2 things happened this week that really spurred this last dump. The first thing was, and I'm just going to pop this up here. So Bitfinex is an exchange, and I talk about Bitfinex a lot. Now, Bitfinex is somewhat of an anonymous company. We don't really know where they exist, but they are one of the biggest exchanges and make a lot of money. Well, the CEO of that company also started a company called Tether. And what Tether was designed to do was to basically generate somewhat of a coin that mirrors the US dollar. So a lot of the exchanges that you go to, like Binance, will trade US, you'll see USDT, which is US dollar to Tether. And so this is for exchanges that don't actually allow people to put in US dollars into their exchange, but allow them to trade US dollar to Bitcoin pairs, and then they have something to actually use to exchange. So it's like you're using US dollars. It's said that they have so much money backing this, but they haven't really audited, or they haven't really given, because they're somewhat of an anonymous or a novelty, that they're really not, they're not US company, and they're probably located in a country that's a tax haven, and so they're not really accountable to specific countries or laws of specific countries. So one of the things was people have been questioning whether they have the money to back all of this Tether that's out there. And if you ever want to really get into understanding what Tether is, just do a search in Google for Tether. But what happened was that there was the U.S. Trade Commission had subpoenaed their records, Bitfinex's records. And when the news was released on Tuesday, and I'm going to show you the charts, the news was released on Tuesday. They said that they were sent that subpoena on Tuesday. And so if we look at, so you can see that we were somewhat in a sideways. And if we look at here, which was the 29th, then we had this major dump here, right? This is when that news came out about Bitfinex and Tether. And so people started questioning whether, was Bitfinex in trouble? It's like the biggest exchange, so people started panicking and start panic selling. And so what ends up happening is that we have this huge sell-off. So Bitcoin ended up dropping from 11,852 down to closing at 10,171. So almost $2,000 drop just because of that news. Now it turns out that that subpoena that was supposedly sent on Tuesday was actually sent on December 6th. So it's old news, but somebody actually reported it this week, which caused the markets to freak out. And then it turns out that, again, the U.S. Trade Commission has no bearing on what Bitfinex does because they're not a U.S. company. So whether they send them a subpoena or not, one of the reasons is that Bitfinex doesn't even have U.S. customers. They will not open accounts for U.S. customers. So they really do not fall under any kind of U.S. jurisdiction. So whether they sent them a subpoena or not, it really is irrelevant. And the fact of the timing of it was suspect as well. And the thing is that you get a lot of this FUD news. And again, you're going to hear this term FUD. And so everybody asks, what does FUD stand for? And so what it is it's fear, uncertainty, and doubt in the market. They call it, so typically when there's any kind of fear, any kind of news that comes out that causes fear in the market, that causes uncertainty as to what's going to happen to Bitcoin. So people, a news article comes out saying that Bitcoin is tanking, right? So that generates fear, and it generates uncertainty and doubt. And typically when that happens, people sell off. People panic sell, right? And so you're going to hear that term FUD, and that's what it is. It's fear, uncertainty, and doubt. And it affects the markets typically in a negative way, right? But true traders, look for stuff like this. And, whenever you see FUD like this, there's definitely opportunities to buy. So it's just about knowing when to get in and when not to get in. And the fact that, the fact that we've been dropping, and I see news articles all the time about, the bubble breaking and this, that, and the other thing. And it's come down $10,000 in a short period of time. But again, this is a natural correction, right? And again, remembering that we went up just as quick in a short period of time, right? So we were at like $5,000 in November, right? And so within a month and a half, we went up to 20,000, right? That's just not sustainable, right? So you have to understand that in any kind of market, whether it's a stock market, a currency, a cryptocurrency, you're going to get your ups and downs. You're going to get your peaks and you're going to get your valleys. And it's about knowing when to buy in and when not to, and not to panic, right? The other thing is incorporating good money management. And we'll get into this over the weeks, but good money management, stopping yourself out. And I talked to my coaching students this week about, putting in some tight stops and, knowing the fact that, because I know a lot of people, jumped in here. They, when they start seeing Bitcoin go up so quickly over the last few months, it's been all the rage. It's like there's been so much stuff on Facebook about people advertising on Facebook that Facebook just banned all advertising for cryptocurrency, right? And the fact is that everybody and their brother is jumping into it because of the sudden surge, right? For it to go to, well, let's look at here. Like back here in September, we were at $3,800. So to go from $3,800 to almost $20,000 in 3 months, right? That is unheard of. So, and the more people that jumped in, right, the quicker the price went up. People started getting that FOMO feeling, the fear of missing out. So they wanted to get in. So remembering that when you're buying, somebody has to be selling, right? So that when people were buying up here, people ended up getting stuck up here, and they're sitting here with coins that they paid $19,000 for. And now that coin is worth $8,800, right? So when we talk about money management from a trading perspective, whether you're short-term or you're long-term, right? Again, you want to have a certain point where you want to say, okay, if it drops a certain percentage, you want to stop yourself out, or you want to sell it and look for another opportunity to buy back in, right? Because even if you had, say, for instance, you bought it at 19,148, thinking that it was going to go up, and then you set yourself a stop for 18,000. So you would have lost $1,100 if you own one Bitcoin, okay? So what you do is you look for another opportunity to buy in where you can make up that $1,000. So you can see if you're now sitting with $18,000 and it happened to come all the way down here, well, you could have bought in at 10,000 and then run it up and sold it up here, right? Even if you just held your money here and even bought it down at 8,800, you could buy two now for the price of one that it cost you up here. But without stops or good money management, there are people that are still sitting waiting for the market to come back up here, right? And, I'll tell you right now, again, my feeling on this is that again, nobody knows what's going to happen, where it's going to go, but, I'm pretty confident that we're going to get back up here. But it means that this person has to wait here until the market catches up for them to break even. But had they, stopped themselves out for a loss of $1,000 and waited for an opportunity to buy back in, then they, again, could have bought in down here at $8,800. By the time they catch up here, they've already made a $10,000 profit. So money management's important. Again, that wasn't what I wanted to really talk about, but, it kind of goes along with the market. So again, the other thing I wanted to talk about was what happened today that seemed to trigger this downfall, right? Because again, we had the Bitfinex issue here, and then we had somewhat of a recovery, and then all of a sudden we had a tank again from 274 down to, it's currently now at 8,800, which is fighting the 8,800 level. Actually, it looks like it just broke it. So it's fighting at about 8,800. So again, that's another $1,200. That's another $2,000 drop, $1,200 drop. And so what happened this morning was news came out of India that they were going to ban all cryptocurrency, right? So the news was that it was going to be illegal to participate it was going to be illegal to own cryptocurrency. Well, as it turned out, the news desk that reported the government announcement had interpreted it incorrectly. And what they were saying was that they were going to crack down on illegal uses of cryptocurrency, not necessarily on cryptocurrency. But by that time, it had already had its effect and caused the market to start going down. So now at this point in time, we have to look for, Bitcoin's looking for its support, where it's going to be able to support. Right now, we're looking at, so as it's coming down, we kind of look at where the previous support was. So previously we had, let me show you this here. Previously we were in and about here. You can see that it bounced off a couple times. As soon as it broke through here, we knew we were coming down. And so how I figure out the support is I got green candles coming up, but I look where they're kind of bunched together. So to me, this is the next area that I'm looking at. So you can see here we had 3 green candles, and we had a red and a green and a red and a green, and then it broke through. So that tells me that this area here was roughly our resistance when it was over here. Well, once we actually broke through, when we talk about support and resistance, as soon as it broke through the resistance line, it now becomes support. So as it came all the way up here, and it came down here, and it came back up here, now it came down. We're looking for this. It could potentially come all the way down here, which we're looking at $8,300 level, right? So I'm looking at this coming down and potentially bouncing off this a couple times and seeing how strong this support is. If it's not very strong, then we could be looking at coming down as far as down here. And again, so we have this here. I don't think it's going to get down this way because again, we also have our Fibonacci as our support here too. But actually we have another one up here. So let me draw here. So again, how I figure out my support and resistance is I follow the trend and then I look for a reversal. So you can see here that we went up, we came back. So it's almost like it hit something, it bounced off it, came back, went back up, came back down, and then continued up. So I would take this area here as resistance, which now becomes support. So now we're looking at areas where this could potentially bounce. We can also use this as opportunities to put in our buy orders if we wanted to. So again, I would look to buy in here, which would be, so roughly 83.02. So putting a buy order in at say 83.10. And then what you do is you put a stop loss below that at say 7,900. So you know, if you guessed wrong, then you would lose 400 bucks. But the idea is that we're looking at it coming down, hitting support and bouncing back up. And it could bounce in between these two. Remember, this was support. We just crashed through this. This now becomes resistance. So we could see it come down here, bounce here, come back up, bounce here, bounce down here, either go through or continue bouncing and then coming through. And if you actually look at older charts or different time frames, you'll see that happen. So again, we'll get into more support and resistance, price action, all that kind of stuff. But that's a simple way of looking at potential buys, buy-in, and when to sell, and so on and so forth. So anyway, is there any questions? Any questions about? And I'm new to this platform. I'm used to GoToMeeting, so I'm trying to get used to Zoom here. So let's see what we got here. Yeah. So Christine, it was 7K when I first went to buy, but was 19K by the time I bought after opening accounts. I know it takes a long time to open accounts and stuff like that. So, but again, when you're trading and stuff like that, whether it's a day trading or whether you're swing trading or you're holding for a longer term, you still want to set your losses and you want to set even your profit points as well. One other thing I'll touch on here is, let's say, so what we'll do here is, let me just pull this back up and I'm just going to give you an example. So let's just say, for instance, we see that this next is our next support level, which is 83.02. So let's say we put in an order for 83.10, okay? So what we're doing is we're looking for it to come down and bounce off support, fill our order at 83.10, and then continue up here, okay? So we can do one of two things, right? So again, now this support becomes resistance, and we could set our sell here thinking it's going to bounce back down, right? Or we could just hold on. So we're going to buy here. We're going to put a stop loss down here, and we're hoping that we're going to run up. So let's just say, for instance, I'm going to take this out. Let's just assume that we have. Let me just get my arrow here. Hang on a second. Let me do a trend line here. So we're assuming that it's going to come down here. And then let's say, for instance, it runs up. It bounces and continues up. Okay? So when we bought it here, right, we set our stop loss at, and let me just pull this up so it might make a little bit clearer. So what we're going to do is we're going to put in a limit order to say to our exchange that we're going to buy, we want to buy 1 Bitcoin at 83.10. So if the price comes down to 83.10, we're going to buy 1 Bitcoin. And once we buy, we're going to put our stop in, and we're going to stop ourselves out if the price happens to come down to, and again, we want to figure out our risk to reward. Again, we'll get into that. So let's just say we want to do it at 7,800. So what we'll do is we'll put in our stop in there for, so it was 83, and we're going to say 8,000. So we're going to do 799. And the reason I would do 799 is because 8,000 is a psychological support. Even numbers tend to be a psychological support, which tends to have a lot of weight. If it breaks through, you tend to see it go up quickly or down quickly. So what I would do is, if I want to stop myself out, I want to give myself some room in case it pulls through and then pulls back up. So what I would do is I would set up at 799, looking at 8,000 as my psychological support that it would have to break. And so let's say, for instance, so I get filled at 83.10. I'm looking for the price to go up. And then I want to set my stop loss at 70 or 8, just below $8,000. So if I guess wrong or it breaks through this support, I know I'm not going to hold the position. I would lose, in this case, $310 on 1 Bitcoin. And then what I do is I look for the next support and potentially buy in there, or another opportunity to buy in. So let's say it worked in our favor and it came down here. It bounced off of 83.02 and then started up here. So as soon as we get up to say it gets up to $10,000. Actually, let's do 9,000. What we can do initially is we can take our stop loss and move it up to break even, right? So we change our stop loss, and what this is called a trailing stop. So as the price continues up, right, what we do is we continue to follow it up with our stop. So if we go up to, say, 10,000, we may want to move our stop to 9,000 to give us some room, right? If we just want to follow this up and get as much profit as possible, then we could continue to follow it up. So if it goes up to, say, 12,000, right, then what we could do is maybe move this up to 11,000 or 11,500. And then if the market turns on us, and again, we're going to be doing our technical analysis as we go up here, but this is just for an example sake to show you that, we're still setting our stops, but we're still in a profit situation. So we're not giving all of our profit back. So in this case, if it goes up to say 12,000 and then it pulls back and hits 11.5, well, then it's going to sell our order. We're going to sell our 1 Bitcoin. We end up with 11.5 and we bought it at 83.10. So what ends up happening is we've now taken our profit. We're now looking for an opportunity to buy back in. So how that benefits us is, let's say, for instance, it went up to 12 and it came back to 11.5 and then it just came back to, and as I told you before, let's just say we went like this. The markets don't go straight up. The markets go up and then they come down. So it comes down. We got filled at 11.5. The market comes back to around 10 where we got some support in here. We put another order to buy in at, say, 10,000 with our stop below. And if we get filled, then we ride it up again. So what we ended up doing is we made our profit up here, right? If we hadn't stopped out, then it would have continued down here. If it continued running down here, we would have ended up giving all our profits back. So what it does is it puts us in a position where we have our profit. We can now buy in at a lower price. And if it continues up, we profit even more. If it continues to go down, we have our stop. So we just watch for another opportunity to buy back in. Does that make sense? So Paige is asking, what's the difference between putting a stop order in just selling it as a limit order? Okay. So if we want, now I'm not sure GDAX does this, but what you can do is on Bitfinex, you can put a limit sell. And so what happens is when you do a stop, it actually does a market order for you. So it actually sells it at that point, right? If, let's say, for instance, with a limit order, if you bought it at 83.02, so let's go back to my little chart here. If we bought it at 83.02 and we wanted to put a limit order, if we wanted to put a limit order at, say, 11.5, okay, so we want to sell, we want to do a limit sell at 11.5, okay? So what that means is that if it comes down to 83.10, then we're going to buy at 83.10. We're saying, okay, if somebody's willing to sell us one for 83.10, we're going to buy it at that. So now once we put in a limit sell, we're now a seller. We're now saying that we're willing to sell that 1 Bitcoin for 11.5. But if the market never gets up to that price point, then we will never sell that Bitcoin, okay? With a stop, you will get stopped out. So if I do a stop sell, I'm going to do a stop below what the current price is. When we do a limit sell, right, we're going to do it above what the current price is. Does that make sense? Paige, does that make sense? Good, good, okay. So that way, again, when we're limit selling, the order, again, we have to find somebody that's going to buy it off of us. With a stop, what's going to happen is the exchange is going to sell it for whatever price they can get, okay? So let me just kind of clarify this. Even though you have a stop in here, let's say we have a stop sell, and I'm jumping ahead, but we do want to talk about this tonight. So if we do a stop sell at 11.5 and the market's at 12, well, if the market comes crashing down and there's a whole bunch of people that want to sell at 11.50, right? There may not be enough people to buy, or we may end up, and there has been cases where you put a stop in 11.50, but you actually only get 11.400 or 11.450. It's really depending on what people are, what the person's, and how many people are willing to buy it for. So you will see that happen on a stop on a market order. So yeah, and depending on your time frames as well, right? And just to jump back, what I'll do is I'll jump back to the order book just to give you an example, okay? So let's say, for instance, and I'm probably going to, let me just see if I can do this here. Okay, I'm going to do a screenshot here. so that we get it, so this doesn't change on us. So let me just do this here. I'm going to capture this here. Okay. So let's just, for argument's sake, says that, so I want to put, so I'm saying that if the price comes down to 871, right, I want to sell my position. Okay. But what happens is they're going to, so let's say I had 15 Bitcoin. Okay. So that means that I need to have buyers that are going to buy my Bitcoin. If the price is coming down and it comes down here and I have 15 to sell, but there's only 13 people or 13 Bitcoin buy here, that means I would get 8871.9 on my 13, and then the remainder I would only get 8771. So to put it in a bigger perspective, let's say I had a stop sell for 100 Bitcoin. Right? So if I did 100 Bitcoin, right, 13 of that 100, I would get 8871. 0.6 of that 100, I would get 8871, right? And so whatever, because that's all, these people are just looking to buy, right? I have 100 that I want them to sell. And right now there's only 15 that are looking to buy. So if I was to sell that whole 100, my price that I would get for that 100 would vary between 8871 down to 8856. Even though I said do a stop sell at 8871.9, I won't get it because there's not enough people buying all that 100 coins for that, or 50 coins even. Even if I had 25 Bitcoin, right, I could only sell 13 to these guys at this price, and then I'd have to sell 0.6 at this price, 0.98 at this price. And so what I'm telling the exchange is get what you can once it gets to that price point. Does that make sense? So as much as I'm setting a stop, right, in a good market, right, you're going to get your whole order filled and you're not going to have a lot. Like in this case here, if it comes to 8871.9 and I have that as my stop and I only have one Bitcoin, then I'm going to get 8871.9. But if I have more Bitcoin to sell than there is people to buy, then I'm going to get staggered pricing, and I could get less than what I'd set for my stop. And when you get like a massive downturn, that does happen, and that can happen. Does that make sense? So let me get rid of it. I just need to pull up the chat again because it keeps disappearing on me here. Hang on a sec. All right. So does that make sense as far as, again, how this, so when you do a limit order, you'll get filled, right? Because the market won't continue up. So let's say, for instance, I had a limit order at 8872 and I said, I want to sell 10 Bitcoin. On a limit order, the market price wouldn't go up until all of my Bitcoin was filled at 8872. So I'm guaranteed that I can sell it at 8872, right? But if I do a market sell or a stop, there's no guarantee I'll get 8872. It starts to sell it at whatever price they can get at 8872 or whatever price I want to sell it at. So that would be the difference between the market and the limit. And we'll show you when I'm going to show you on the exchanges as well. So let me get rid of this here. And let me pop in here. So TradingView, let's go through TradingView. I know Paige, we've been through this. Christine, we've been through this. So it will be a refresher for you guys. Hopefully everybody else has picked up their free account. Jay is asking, what is better, a limit sell or a stop sell? From a safety perspective, a stop sell, what a stop sell is going to do is if the market turns on you, it will stop you out. It's more of insurance. If you have a certain rate of return that you want on a limit sell, and again, on some exchanges, you can actually combine them. Like on Bitfinex, you can combine them. So you can say, if the price gets up to this point, sell it at that price and it sells it at a limit. Limit orders are cheaper in fees than what stop orders are. And what stop more orders are actually market orders. So it doesn't end up going into the book and you won't see it in the order book. It's as soon as you put in a market order or a stop sell or a stop buy, the exchange buys it at whatever rate that they can get, right? So you typically use a stop sell as insurance in case the market goes against you. You can do limit sells if you have a certain say rate of return that you wanted to get on your trade. Now, let me give you another example here. If I go back here, remember how I drew these? Let me get rid of this here. So I drew these trend lines here, okay? And so I said, if it comes down, so let me just draw on the other one I had. So the previous support was right here. And you see that we broke through this, okay? So let's say, for instance, and like I said, when it breaks through support, support becomes resistance, which means that if it comes down here and we buy here at 83.10, what we could do is we could assume that we're going to get a bounce up here, right, just before this line, okay? So in that case, we would say, okay, let me pull up this chart here. We would say, hang on a sec. So what we could do is we could say, buy it if it hits 83.10, and then once we bought it, we can do a limit sell at just below 90. So we're saying our previous support, which is now resistance, was at 99.10. So we could put it in, say, at 99.05. So we could say if it hits 99 or 99.05, sell our Bitcoin, which we're assuming that, again, it's going to come up here, it's going to bounce and come back down here, right? So in this way, we would pay less fees, we would make more money if it hit up here, and because we would have our stop down here, which means if it bounced up here and stopped us out, we would stop it at a lower price. Does that make sense? So again, if we have it coming down, if we have it coming down here, so it comes here, we buy here, and then it comes back up. And as insurance, we know this is going to be resistance, or we think it's going to be resistance, and that we think that it's going to bounce off here. So if we put a limit order in here, as soon as it gets up here, it will sell. If it doesn't get up here, then it won't sell. If it happens to just come this far and then continue down, then our limit is not going to get filled. So we better hope that we have a stop in there to stop it from us losing our way. Does that make sense? So again, with a limit order, you're paying less fees, but you're hoping that the price is going to get up here. With a stop order, a stop isn't more insurance. You're going to pay more in fees, and it's more of insurance in case the market turns against you, right? So we think, again, we don't know what's going to happen until it happens. We can just look at history, right? And the rule is that we look at past history. We can roughly figure out what's support and resistance because other people are thinking the same thing, right? But if it happens just to plow right through here and we have our stop here, or if it goes up here, it doesn't get up as high as we wanted it to, say it only goes here and then continues down, then if it comes down here, then we stop out with a loss, we regroup and look for another opportunity. But if we just have our limit up here with no stop, it could run away down, kind of like this scenario here. If you have no stop when you bought up here, right, you're still holding that $19,000 asset at 8,300. So a limit order, it needs to be filled. You're going to pay less fees. A stop or market order, you're going to pay more fees. And actually on GDAX, limit orders are free. Market orders or stops are, I think, 0.2%. And then on Bitfinex, I'm not sure about Binance. I think it's 0.1, same as Bitfinex. So on limit orders, it's 0.1% fees. And on market orders or stops, you're looking at 0.2% fees. Does that make sense? Jay, does that answer your question? Does that make sense? Okay, so what I'm going to do, not quite. Okay. Okay, let's come back to that question. Again, what's better? It's not really about what's better or what's not, right? Because you're using them in two different scenarios. Correct. If your limit is when you've set your, again, you bought it at a certain price, you know what price you want to sell it, that's when you would do a limit sell, right? But if it doesn't reach it, you're not going to sell it, you're going to be holding it, right? And if it turns on, you can still use a market sell to sell it, and then a stop is going to, okay, so if my limit is not met, it just won't sell. That's correct. If it doesn't get up that high, it won't sell. But if the market goes the other way, you will definitely lose money, right? That's the point of a stop. So if you bought it at, let me do this again, okay? So we bought it at 83.10, okay? So once we bought it, you said, okay, I want to sell it at 99.10. So you put in a limit order to say, okay, if it gets up to 99.10, then you want to sell it. But if the market continues down, you bought it at 83.02. Well, what happens if the market goes down to 58.08? You're still waiting for the market to come back up here and fill at 99.10, right? So what a stop does is it prevents you from a loss, prevents you from losing money. And it allows you to regroup and find another chance to get in. The thing about this is it's like a game, okay? And one of the things you have to remember when you're playing this game, like any game, you know, any of you sports people out there, you're never going to win 100% of the time, right? And you should not come into trading thinking that you're going to win 100% of the time, because you're going to get caught, right? Because if you bought it at 83.02 and you don't have your risk or your stops in here to stop you out, right? This market could continue down. Let's go back up to this scenario here. Okay, obviously people who bought it at $19,000 were expecting it to go up to $20,000, $21,000, $22,000. Okay, so if you buy it at $19,000 and you say, okay, I'll be happy to make $1,000 over the next couple of days. So I would set a limit order at $20,000, hoping that the market will continue up and I'm not going to be able to sell this because there's going to be people that want to buy it at $20,000. Well, guess what? It never got up there, right? So if I don't have a stop, again, my limit's not going to protect me from the market changing directions and coming back down. So now I'd still be holding my $19,000 Bitcoin, and it ends up being $8,000, right? So again, when we get into money management, and that, you know, we're not looking at that tonight. We're looking at risk and reward. When we're looking at opportunities like support and resistance and where to buy, we're looking also at our risk and reward, right? We're looking at, you know, typically a 2-to-1 risk to reward, meaning that if we buy here, we're hoping to, you know, say lose a buck here, but we know we could gain $2 or more, right? But we also want to, you know that we want to basically say, okay, it didn't play out the way we expected it to play out. So let's take our loss. We lost this one. Somebody beat us. Okay, the bears beat us, right? So now what we're going to do is we're going to regroup and we're going to look for another opportunity to buy in. So we would look, say, at this support level and say, okay, we're going to put an order in here and we're going to try it again. And again, if we put a stop in here, we're going to stop ourselves out. We'll be down a little bit of cash, but we will be cash and we'll be looking for another opportunity, right? Versus buying it here, and then the market continues down to 5,000, 4,000, 3,000, and I still have a $19,000 Bitcoin. We don't know if it's going to go down to 4,000. Nobody thinks it's going to go down to 4,000, but nobody knows. We don't know what kind of news is coming out. If the U.S. comes out tomorrow and says, we're going to ban all cryptocurrency, nobody in the U.S. is allowed to trade cryptocurrency. This is going to crash big time. It could go down to 2,000, 1,000. We could end up where we were last year. We don't know where this is going to go, right? So by buying and holding and not protecting your investment, by stopping yourself out, you're really putting your money at risk. And anybody who bought at $19,000 and is still sitting at $19,000 is probably shaking in their boots right now because they just lost $10,000 or almost $12,000, right? If the market turns, you're still waiting for the market to come back up. It could be 3-4 months before it ever gets back up here. It could be a year or 2 years before it ever comes back up here. But so it could take you 2 years just to break even. But by jumping out with a little bit of a loss and looking for an opportunity to jump back in, right? And even taking small rewards, taking small profits, right? And again, we're gonna get into that. We're not looking to figure out what the bottom is and figure out what the top is. We're looking at buying low and selling high, right? If it continues up and we miss out on a bit of profit, we still made profit. And that's what we're looking at because it will come back. May not come back to where we sold, but now we look for another opportunity to buy in and then sell again. So, yeah, and actually Grant makes a good point. Simply put, you never bet more than you can afford to lose, which is a good point. Thanks, Grant. So I don't want to belabor this. And again, we can talk about this over time, but stops are protection, right? Limits, again, if you have a predefined rate of return that you're looking to make on a particular trade, and once we get into risk and reward, you know, you will go into a trade knowing what you're going to buy it at, when you want to sell it, and what you're willing to risk. And that's what day traders do, right? And again, even swing traders as well, right? For you holding on for longer term, if you can buy it here and sell it up here, and then buy it back at a little bit of a lower price, or stop yourself out and take some profits and buy at a lower price, you're still going to end up with more coin. And that's the idea behind it. But again, when you buy at 19,000 and you sit on that 19,000, it could be 2, 3, 5 years. With cryptocurrency, it moves a lot quicker, but it's not going to move that way forever. Does that make sense? Again, Jay, I hope I answered the question. If not, we can take it offline and we can talk about it in the group, but and I'll see if I can find something that might explain stops a little bit more and limits a little bit more. But just remember, stops are your protection. Okay, so let's look at TradingView, and we are doing a time check here. I'm going to try to finish off at 9:30, and I do want to do some Q&As. I'm actually going to do the Q&A after. So what we'll do is we'll look through TradingView. Actually, you know what? Let me ask a question here. You know what? I'm going to do the TradingView because there's a lot of people that aren't here and probably get some value out of it. So what we're going to do is we're going to look at TradingView charts. And we're going to talk, again, we're going to look into GDAX, Binance on how to actually set your orders. And I want to try to do a finish at about 9:30. But we'll see how this all plays out. And then we'll do a Q&A at the end. Any questions so far? I always get stuck on here. Hang on a sec. All right, cool. All right, so let's jump over to my charts here. And I'm going to clean this up here. A second here. I'm going to remove this. All right, so let me take off my support lines here. Okay, so anybody that does not have a TradingView account, we're going to be using this a lot, okay? Whenever we have our walkthroughs. We're going to be looking at the charts. We're going to be plotting support and resistance. We're going to be looking at potential buy-ins and stuff like that as we progress through this training. So everybody should have a TradingView account. There's a link in the Facebook group, and it's free to join, okay? There is some limits as to what you can do with it. And I do suggest if you are a serious trader, you're going to want to look to upgrade it. I'm using a similar service that uses TradingView charts. It's called Coinigy. But you need to have a charting service and something that's going to allow you to look at multiple charts and so on and so forth. With TradingView, you can, with the paid version, you can look at multiple charts, and again, you can put multiple indicators on it. And there is a 30-day trial as well, so you can actually try the Pro version or the Pro Plus version for 30 days for free. But getting started, it's absolutely free. You don't need to use it to get going, but we are going to be using this. So I'm going to do a little bit of a walkthrough. I kind of like the black background, but when you actually get TradingView, it has a white background. So what you want to do is you want to click on the chart properties up top here, and it's going to pull up this here. And what you want to make sure is you have your candlesticks, and my green is my bullish candlestick, and the red is my bearish candlestick, okay? So in here, you want to make sure your style is candles, okay? And you're looking at your greens, because some of the candles will come up as hollow. You'll see, so actually, it may come in as hollow candles, so you can see the hollow candles. You may like those better, but I would just, again, click the candlesticks, and then what you want to do is you set your green, you click on the color, pick whatever color you want. You can do this here, whether it's a little bit more transparent, or if it's full color, I leave it at full color. I got my red set up here, and then I have my wick colors, okay? So you guys should know what the wicks are and stuff like that. We'll talk about that in the Q&A as well. So typically your bulls are your green, and your bears, your bearish candles are your red. That's how I would set up. Everything else, for what you need it for right now, you can leave it as is. The other thing is if you'll have it set up with the white. So let me do this here. So when you get your charts, it looks like this. To me, it's like really bright. I like the dark color. So all you have to do is just click on dark. If you like the white, perfect. I just like the dark color. And so you just simply do that and you're good to go. Now, the thing with TradingView is it's not just for cryptocurrency. So you can actually look up stock prices. You can chart stock prices. You can chart currency pairs. You can set your favorites over here. So you can see I always like to keep up to date with what's going on with the USD CAD. I have several of the coins in here, although I don't use this a lot. My Bitfinex also has an embedded TradingView chart, so I kind of use the charts within Bitfinex plus within Coinigy. But when I do come in here to kind of show everybody how to use the platform, you can actually have symbols over here, and it's easy to jump from one symbol to the other. So if there's certain pairs that you're looking at, say in my case, Ethereum and USD, or Ethereum to BTC, Bitcoin Cash to USD, I can just click on the chart and it switches over. Okay, so kind of gives it to you at a glance, and you can see what's going on with the different currencies, and you get a price point. So if I want to see what's going on with USD CAD, I can see that it's tumbling, which is good for me in the Canadian dollar. So, so you have your watch list over here. This buy and sell, you can actually buy and sell. You can, if you actually have this connected to the exchange you're using. So you can actually trade within TradingView. If your exchange, if the API works with TradingView. Again, I don't use it. It's there if you want it. That way you don't have to jump back and forth. And it's going to depend on your exchange. And I know a lot of brokerage houses too. You can buy stocks and stuff if you got it connected to your brokerage house. So that's available to you, but it's only available to the pro members. So you have to upgrade. They always have news. You can set some news here that you can check out. They actually have, here you go here. Wolf of Wall Street says Bitcoin could hit 50K before crashing. So there you go. That just came out. These are news things that cause our FUD one way or the other, right? Little news items like that can cause the price of Bitcoin to go up. What happened today with India caused the price to go down, or helped it go down. So it's always good to know what's going on in the world of cryptocurrency. Looking for news coming out, whether it's fake news or not, it does have an impact on the markets. So you have your news. You actually go to tradingview.com, and this is right in the charts. And let me just actually go there. If I go to tradingview.com, you can actually see a lot of news there and all sorts of stuff. So let me do it here. And then I'll bring it back in here. I'm just going to go grab a drink too. My mouth is getting dry. So if you go to tradingview.com, you can actually get market information. You can get ideas. People post charts and where they think are going to happen. This guy's talking about setting up 100% retracement. You can look at what some people are saying. And then from here, you just click on your charts. And it will take you over to the charting. So you can actually see some pretty good news there and all that kind of stuff. So again, to set your background, your chart properties, you click here. Over on the left side here is where you type in your currency pair. So again, with cryptocurrency, different exchanges have different prices, which I showed you guys earlier, where we got Bitfinex at 88.51 right now, and you got GDAX at 86.61. So we almost have a $200 difference between exchanges. So in TradingView, if the exchange I'm trading on is Bitfinex, then it only makes sense that I actually use a Bitfinex chart. If I'm on GDAX, I'm going to use the Coinbase chart, right? If I'm on GDAX, I don't want to be using a Bitfinex chart because you can see the prices are different. The chart's going to be different. So you can see here we have Bitfinex, Coinbase, Bitstamp, Bittrex, Binance, Poloniex. So all of the major exchanges have their own, and again, TradingView is great because you can pick whatever exchange you're on and look at their charts. So if I'm trading, and this is the other thing too, is you can see that Bitfinex or Coinbase is BTC to US dollars. This is true US dollar. Bitfinex is true US dollar. But if you look at Binance, it's USDT. This is Tether. And again, if you want to understand what Tether is, do a search for Tether, Tether, and it's supposedly supposed to be equivalent to the US dollar, right? It's supposed to be the same type of philosophy. So there's still questions about it. So again, Poloniex, same thing, Tether USD. So you can't trade in US dollars, but you can trade in USDT. So again, let's say for instance, so the only way you could use it on Poloniex, what would happen is if you had one Bitcoin, say you bought a Bitcoin at Coinbase and you transferred it to Poloniex and then you sold it, you would be selling it again, if you wanted to sell it using BTC USDT, you would be selling one Bitcoin. Well, let's pull it up here so I can show you. Right, so here it's 88.65. You can see the price is pretty much this. Sorry, that's BTC USD. Let's look at the price here. So it's 88.04 Tether, right? Which is pretty close. Actually, it's $40 difference, right? So if I sold one Bitcoin on Poloniex, I would get 88.09 Tether USD, not USD dollars. And then I can use Tether USD to buy back another Bitcoin. So if I sold a Bitcoin at 8809, then I could, buy it back, say down here, maybe at 8800 Tether, and then I could take that one Bitcoin and transfer it back. So hopefully that makes sense. It's again for a company such as Poloniex that don't have US dollars sitting in their bank account, they use Tether. So again, let's go back here. So if I want to pull up, say, Ethereum, right? I would just type in Ethereum. I would look at Ethereum USD on Bitfinex, and I would pull up the chart, right? If I happen to be playing the stock market and I want to see what Apple's doing, right? And I happen to be trading on NASDAQ, or I want to see how it's doing on NASDAQ, I can actually pull it up and look at that. So you can see if I want to do Euro USD. Let's see if I can get up here. So I'm going to do currency pairs. I'm going to do Euro USD. There we go. So and I'm so I'm playing a little bit of the Forex market. I want Euro USD on Oanda. I can see what that chart looks like. But for the sake of what we're doing cryptocurrency. You can pull up any of the cryptocurrency pairs. You just need to know what the symbol is. Again, if I wanted to do Litecoin, I would do Litecoin USD. I would do it on Bitfinex, and then I can look at the charts and so on and so forth. So this is where you pull up the charts you want. Remember, you want to pull up the chart based on the exchange that you're actually making trades. Okay? Let me pull up BTC here. And it's still tumbling away. We're down. Let's hope that it finds a bottom soon. And Bitfinex. Right here. Okay, time frames. When I'm looking at time frames, if you're a day trader, you're more concerned about the 5-minute, 15-minute, 1 hour. Some people actually like to go down right to the minute. For swing traders, you're more 4-hour, daily, weekly. Some like to look at monthly, but crypto isn't that old, so I still look at the monthly chart occasionally. In TradingView, what you do is you pull up this little arrow here. When you come in here, you're just going to have, you're not going to have these up here. So you're going to click on the drop down. You can mouse over. You're going to see a little star. You just click on the star, and that shows up as your pair. So you can see the ones that I've starred. I starred 5, 15-minute. Some people like to do 30-minute, 45-minute. You can star those. Whatever time frames you like to look at. Some day traders will have, 30 and 45 minutes, 2-hour, 3-hour charts. So you can select which ones you want. If you're more a swing trader and you're just worried about 4-hour daily, weekly, you can, just select those. But I do both. So I like to know what's going on short term and long term. I like to analyze where the market's going and what it's doing. So that's how you set your charts. Our indicators, okay. Now I actually created a custom indicator myself using PineScript, which allowed. Now the thing that happens with the free version of TradingView is you're limited to the number of indicators you can have on a chart. So what I did is I actually created my own indicator that I included my major, and I'm actually going to add in all of mine in here. And I'm going to be giving this to my one-on-one students as well. But what it does is I can put in all my EMAs, because I actually have four EMAs that I use. I'll show you what those are. And I combine them in one indicator so that I can put all of those indicators on my chart, but it only acts as one indicator. So in this case, I use the 1226 cross. You can see the little plus sign here, so I can see when it's crossing, because it gives me a good indicator of a trend change. And then I use a Fibonacci 55 number as one of my EMAs, or exponential moving averages. So what I put on my chart, and again, we want indicators, and any experienced people, you have all of your indicators that you want to put on there. What I tend to put on my charts, and again, you won't see them all here, but I'll put in the relative strength indicator, which is RSI. it tells me when the market is overbought and oversold. We're going to get into when we start talking about trading strategies and stuff like that. These give us some really, really good indicators as to when to buy and when to sell. So this one, if you put it on your chart, you type in RSI, you pull up relative strength index, and we're using the default time frame, which is 14, or the time period, which is 14. Once you put it, so you have that indicator that shows up as a so you have moving averages that end up on your chart, and again, you can separate these as well. So this ends up, I have this outside in its own little area here, okay? So if you want to change this, if you want to change the color, the background, you just mouse over here and you got your format. You click on your format. This is where you can change your time period. Some people use different RSI periods. Some use 10. I keep it at the default, which is 14. And if I want to change the color, again, I can change it here. I like to have something that's going to stand out on my background here. So I use this teal. Again, it can be transparent. You can see how transparent that is, or you can have it full color so it stops out. I have it somewhat there. You can also change the size of the line to thin or thicker. Okay. You can change it to different types. So you can have histograms. I keep it at line. I keep it like this. And then what I do is my background within my area. So anything that's over 70. So again, these are the lines here. So I can set anything over 70 is the overbought zone. Everything under 30 is oversold. Now, some people like to go even, you'll get less trade opportunities, but some people will set it to 20 and 80. If it's oversold below 20, it's a really good chance that it's going to bounce. And if it's overbought at 80, it's a really good chance that it's going to pull back, which gives good signals. Again, we're not going to get into the signals today. I just want to show you what I'm using and where to find them, okay? I believe by default, it comes with volume, the volume indicator. The volume indicator is what you see down here. You see these candles here? This is where you see whether the volume, again, we use this for volume climaxes. Again, we'll talk about it when we're talking strategies. We're looking for volume climaxes on overbought zones where it gives us a good indicator that we're going to be getting a pullback. Again, you can see here we had the RSI was at 93. So this is a huge indicator that we were getting pretty close to a trend reversal, right? And again, there's some other indicators here where we had divergence here, which again, we'll get into later. But with the RSI actually down, even though the price was going up, this is a huge red flag. The market was going to change directions, and certainly did. So volume 2, the volume was climaxing. We take these as part of, with our RSI as confirmation. It helps us know when to buy in and when to sell. Again, we'll get into that as we, over the next few weeks. So by default, volume should be on your charts. If it's not, you just go into your indicators, you go search, type in volume. So make sure you have volume on your chart, okay? Again, you want to change, I use the default 20, and if you want to change the colors or anything, just go into format. I change the volume to columns because I want to see it as columns, and I plot the moving average on here as well. So I can see if what this does with the moving average is it takes the average volume over a period of time, okay? And then what I do is I look for volume that's protruding outside the moving average, which tells us that we're starting to get large volume, which we're looking at, typically trend direction or changes and so on and so forth. So we use that as well. So volume you want to have in there. You want to have RSI. If you have room on here, I use MACD on my other charts, which is moving average, convergence, divergence. Again, we'll get into indicators another day, but that helps us to confirm a trend change. And then I use moving averages. So one of the things that I'm really a proponent of is two things that I'm heavily into. One is Fibonacci retracement, Fibonacci extensions, and Elliott wave theory. And so I'm going to be trying to teach that to you guys over the next couple of months as well. I use that to determine buy-ins and sells and so on and so forth. And in the cryptocurrency space, they're very accurate. Now, the other thing I do is, other than the 26 moving average, and the reason I do the 26 moving average is because it's automatically available on GDAX. So I know a lot of people use that to determine trend direction, bounces, so on and so forth. So other than that, I'm going to show you on my Bitfinex chart, I use Fibonacci numbers on my moving averages. So I use a 55 moving average. I use a 34 moving average. I use the 26, which is the same as on GDAX. And I use 13 and I use 8. They're all Fibonacci numbers. And if you plot these on your charts, you're going to see that they act very much as support and resistance. And that, again, when we're below the 55 and even the 34, and actually I'm on a 5-minute chart, and I'm going to pull this up quickly. You can see in a lot of cases here that when we're running down here, we're bouncing off the 8. And then when we finally break through it, right, we got to bounce here. I can almost predict that we're going to either bounce off the 34 or the 55, and especially on a downtrend, and it can take several times to break this. So we're actually looking for it to close. The other thing I use is Bollinger Bands, right? In cryptocurrency, combining these together, this here would have been a good short selling on my part, or if I own some cryptocurrency, it would have been a good opportunity to sell here. And again, like I said, we'll get into more details. I'm just showing you the indicators that I use. So again, I use the 55. Now, you're not going to be able to plot all these onto a free version of this chart. So what I would recommend is that at minimum, you put in the RSI. You're going to have the volume. I would put in the 55, and I would put in the 34, and I would put in the 13. And then you're going to see, and then just back test them and watch how they bounce off these indicators. And I'll show samples over the next few weeks. That may also be too many indicators because I think you're only allowed 3. So at minimum, I would put in the 55 and just look for it. When it's above the 55, we're typically in a bullish market. As soon as it crosses below, we're definitely gone bearish. So again, RSI, volume. If you can put in one EMA, make it 55. And again, my EMA is yellow. Again, what I do is I just set it to yellow. I have a fairly thick line. I can go to inputs and just type in 55, leave these the same, close and 0. And in order to do that, I use what we call exponential moving averages versus so there's 2 types of moving averages. And what moving averages does is this 55 basically says that I'm taking what's happened over the previous 55 periods. Okay, so what it means by that is if I'm on a day chart, okay, then it will take the average. So a simple moving average will take the average price, right, for the last 55 days. If I'm on a 4-hour chart, it will do it for the last 55 4-hour periods. If it's 1 hour, it would be the last 55 hours. Okay, and so what I'm doing is we're looking at an average over that period of time. What I use, so there's 2 types of moving averages that you're going to hear about. One is moving average exponential, and one is the simple moving average, or SMA. Okay, there's other ones too. There's different types of moving averages, but those are the 2 that you're going to hear. Exponential moving average, what it does is it gives more weight to the closer period. So again, if I count back 55 candles, with a simple moving average, they're all weighted the same. Okay. Versus with exponential, it gives more weight to the closer and less weight to the further away. So if I add in so I'm using an EMA 55. If I add in a simple moving average, let me see if I can find it on here. Yeah, simple moving average. And yeah, so I'm using the free version here, so it won't allow me to put it in here because I already have other indicators. So what I'll do is I'm going to change, and let me just see what I can do here. Okay, you know what? I'm going to get rid of this one here. I'll pull it back up later. So let me add this back in. And you'll see how it plots differently. So if I do simple moving average, that's moving averages. 4 simple moving averages. Let me try this. No, it's just the moving average. Okay, hang on a sec. I got to get rid of this in order to put this on. So if I do moving average, I'll just do moving average, which is a simple moving average. So if I take this and I make this 55 as well, and I make it, we're going to make it red so we can see it. And I'm going to make it thick. So we're using the same number, but you can see how it plots out differently, right? This is a little closer to what the current price action is. With a simple moving average, it's the average of the last 55 periods, so it can be further away. So with exponential, it's a lot closer, and to me, I get better readings from this. And again, it's all preference at the end of the day. I'm using what works for me. And so what I'm going to do is I'm just going to pull up this Pine script. I'll pull on that other indicator. There we go. All right, so this is a little code I wrote in order to, so for somebody that has a free chart, they can still get additional indicators on their charts. So I prefer the EMAs. Again, other than the 26, I based them off the Fibonacci number. Here's your charting tools on the left-hand side here. Here you click on here, you can draw a trend line. So if I want to draw a trend line, I can draw a trend line down here. We'll get into how these are important. Just like we have our support and resistance lines here, charting out the trends can also give us some good indicators on where the market's going and also act as support and resistance. So we have our trend lines here. We have our horizontal lines. We have drawing tools. We can draw in, rectangles. Again, we'll get into all of this, but all of these tools are here. We can put text on here. So if we wanted to mark up a chart, we just type in, and again, you can highlight it. You can make it bigger, and change colors. It's our color. I want to make it yellow. So again, if you want to mark up a chart, you can do that as well with a text tool. I use Fibonacci retracement a lot. I use Fibonacci extension a lot. There's other tools in here. People use pitchforks, all this kind of stuff. I'm going to be showing you this. This is what I use a lot. And Elliott wave, right? So my, Elliott wave, impulse waves, the correction waves, and all that kind of stuff. So we'll be getting into that over time. And again, everybody has different methods. I'm going to be showing you what works for me. And at the end of the day, you're going to pick what you like and what works for you. So I think that's enough for you to get started. Once you have your chart, you can save it as a template. You can, oh, looks like there are some templates in here I haven't really looked at. And then you can save your own and load them. You know, if you can have different versions and load them and so on and so forth. But to get started, this should get you started. Put on your, you know, the minimum indicators and should be able to go from there. Any questions? I'm going to pull this back up again. Paige is asking, do I recommend one cryptocurrency over another? If you're getting started, I would stick with the big three. Well, it's kind of the big four now, but Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. If you're asking me for a recommendation of a coin that I think is going to do well this year, out of those, my money is on Ethereum. I own a lot of Ethereum. But I also play multiple coins, right? If you actually look at my Bitfinex chart, these are all the pairs that I play, right? And I typically, my main strategy is playing oversold and overbought bounces and I also short margin sell and short sell here as well. So I have indicators telling me if I get a pair that's overbought or oversold, I will go analyze that pair and I will jump in and jump out. And so again, once you get experience, you can get into all these other coins, but I will trade whatever I think I can make a profit on. But to get started, I would, focus on the big three. But if you want a coin to play that I think is going to do well, even in the short term, my money is on Ethereum. I actually own a lot of Ethereum right now for my longer term play. So that's what I would say. But again, that's my opinion, and everybody else is going to have their own opinion. But I like Ethereum. I like their platform. I like where they're going. I think it's going to, I think by April, you're going to see Ethereum at like 1,700. And again, it's another one of those coins. You could have bought it at 250 a couple months ago. And it's hovering at $1,000. It went up to 1,400 before Bitcoin tanked. And right now, Bitcoin still drives everything. Bitcoin drops, everything drops. You can see, Bitcoin's down 13%, but we got coins that are down 21, 22%. There's some good buying opportunities here. For an experienced person, they would look at Bitcoin and be looking to buy in some of these altcoins, because when Bitcoin does decide to find support and continue up, these coins that are down 29% and 21% are going to jump huge. You're going to get huge, and you can buy so much more of it, right? Like look at Ripple right now. Ripple was up to like $3 at Christmas time. You can pick it up now for 88 cents, right? So you could buy, I own 3,000 Ripple right now. And I'm actually looking to buy in some more Ripple because I know that this got potential to double in a short period of time. Probably a lot quicker to double this than Bitcoin, right? Even probably quicker to double this than Ethereum, and I'm pretty bullish on Ethereum, right? So IOTA, like if we look at IOTA, and I'll just give you some examples here, and depending on the exchange, you can't really trade them, but if we look at IOTA, if we look at the daily chart, it was up as high as 580, almost $6. You can pick it up for $1.70 now, right? This could easily double, if not triple, and still be under what its high was like a month ago, December 19th, right? So some of these, Bitcoin's dragging all of the altcoins down, and significantly. Even Bitcoin Cash was up to $4,500. Right now it's at $1,000. So it hit $4,100 on Bitfinex. I know on GDAX it was up to like 45, I believe. Actually, I think when they first opened it, it went up to 9,000. Somebody thought they were buying Bitcoin and they ended up paying 9,000 for Bitcoin Cash. They kind of messed up there. But still, $4,100. It's at 1,100 bucks. You can pick it up now. So even if that doubles to 22, it's still half of what the high was on December 20th, right? So a lot of these, like even let's look at Litecoin. And Litecoin really, really follows Bitcoin. But Litecoin hit 370 was its high. And you pick it up now at at 136. If it doubles, that's only 270, right? And it was as high as 360. Actually, that's the other thing I'm going to show you on TradingView. Up top here, again, once you pick your coin, it'll show you Bitcoin to dollar. It'll tell you what period. It will tell you what exchange. And then you have your open price and your high of the candle, the low of the candle, and the close of the candle. Now watch these numbers, because when you take your cursor and you move it over a candle, look at my top left corner. It shows me the high, the low, the open, and the close for this particular candle, right? And actually, this is a live candle. So let's take an actual candle that finished. So this candle here on the daily it had a high of 10,336, okay? It had a low of 89.41. It closed at 91.81, and it opened at 10,268. So at the bottom here, you can see there's a little bit of a lower wick down here. That's the difference between the close and the low, okay? And then the high of the day was up here, right up top, and then the open was pretty close. It was just a little bit below the high, okay? And if we move our mouse over here, we're going to see it turns green up top. And again, we got the same thing. We can look at a candle, and it tells us there what the open, what the close, the high, and the low of that candle was, right? So that's important to know, right? Again, look at this one here where we got a long body here, right? Or sorry, really low body, long wicks on the bottom here. You can see what the open and the close was, what the highs and the low was. So you just move it over, and that's what this shows up top here. Okay. Let me see what else, if we got some other questions. So I'm hoping this is helpful, guys. I hope you guys are getting something out of it. Any other questions? Any questions about the charts? So if you haven't got a TradingView account, there is a link. Make sure you open TradingView. We're going to be using this a lot. We're going to be drawing on these charts. We're going to be drawing resistance and support. We're going to be looking for long-term opportunities. I'm going to be showing you how to trade over the next few weeks. But today I wanted you to kind of get set up, make sure everybody has a TradingView account. This is being recorded, so I will put the recording up. I think we're going to put it in the Facebook group. I will put it up on YouTube so you guys will have access to it. Hopefully, I've never recorded off of this platform, so hopefully it comes out okay. And so, yeah, so that's TradingView. Any questions? All right, so what do I want to do here? Yeah, I hope, Christine, I hope the recording comes out okay. I've never recorded off this platform. This is Jeff's platform, so I'm hoping this works okay. So we're going to jump into GDAX and Binance. We're almost 2 hours. You guys okay? I know it's going to be a long recording, but hopefully you guys are getting enough out of this. So we're going to look at, we're just going to look at setting up orders with GDAX, Binance, and I'm going to, I'll show you Bitfinex as well. So let's pop over to those platforms. So I'm going to open up GDAX here. Again, in the GDAX, now, again, for me, I'm in Canada, so I'm not allowed to trade BTC USD. So I get a little warning here. So it says that I can only view it. So I can trade currency pairs. So I can trade Litecoin against Bitcoin or Ethereum against Bitcoin, but I can't trade against US dollars. But like on Bitfinex, it's formatted a little differently. You have your ask over here. So again, these are the people that have Bitcoin and are selling and what they're selling it for. These are the people that are looking to buy and what they want to buy it for and how much they want to buy it. And these are the actual orders as they happen. And again, we're seeing a lot of green over here, but I don't know why the price keeps going down. Okay. This here shows you the walls. These are like the buy walls. These are actually staggered up, you know, how many people are looking to buy at the different prices. So if you saw on Bitfinex where we have the cumulative total over here, right, you see these greens and the reds here, and you can see how, you know, all these, so you have the amounts here and they keep accumulating here. Well, GDAX has a nice representation of it in here, and it can show you, you know, and why are we not, and it's not showing now. Look at that. Let me refresh that. So it gives you a graphical representation of the bids and the ask, right? So you can tell, like right now, you can see that it looks like we got more people selling than we do buying, right? And so you can actually go through and see how many Bitcoin and what it's going to take to get there. And you can see, you'll see these walls. You can see this wall right here that the bulls need to break through in order to continue going, right? But it looks like so now we got a wall right here. And you can see here there's 14 Bitcoin. And actually we've got 11 here and 18 here. So this is a nice representation. Again, this is your bearish side. This is your bulls. They're fighting each other. These guys are trying to knock these guys down. These guys are trying to knock these guys down. So it's quite, you know, you start looking at it in that perspective. It does give you that representation. This is the chart that comes with GDAX, and it comes, these two moving averages are automatically on the chart. So this is the 12 and the 26 moving average, and that's why a lot of people that use GDAX use the 26, and you can see that it acts as support and resistance here, right? So it tried to get through, finally broke through, but then it couldn't get through up here. And then you look for that cross as a potential change in direction. Up top here, you got your 5-minute, 15-minute, 1 hour. You can change your candlestick or line. This is what a line looks like. Everybody uses candlesticks. I guess there's still some people that use lines. You got your volume down here. So you can use this chart. And again, it's really simple interface. If I want to do a market buy, which means that I want to buy, hang on here. Okay, so if I have 1 Bitcoin and I want to sell it, I can sell it. I'll just put 1 Bitcoin. Or if I have a half a Bitcoin and want to sell it, I'm basically telling GDAX, because I'm doing a market order, sell it at whatever price you can get. Okay, so I'm looking at here. I can pretty much see, so I'm selling, so I'm kind of up here, so I'm looking for somebody down here. So I see that right here, there's 2 Bitcoins and at 87.98.90. So if I was to sell 0.5 right now, that's how much I would get for it. If I wanted to sell 10, I would get partially filled here, partially filled here, partially filled here until all my 10. Actually, now there's 11, so I would get it all here. So the buy walls are coming up here. So it's simple. If you have a Bitcoin, or if you have a portion of a Bitcoin, and when you have it in here, you'll see how much you have. You just put what you want to sell, and GDAX will fill it for whatever it can get for it. If you want to buy a Bitcoin, you say how much you want to buy. So if I want to buy $1,000, it will buy $1,000 worth of Bitcoin for me at the current at the current ask or at the current market price. So whatever the current ask is over here, this is where it would fill it. Okay, and so in this case, if I wanted, I would get roughly 0.1133 Bitcoin. So if you're going to buy at market, then you just put in how much Bitcoin you want to buy in US dollars. Limit orders, this is where you put in how much Bitcoin and what price you want to pay. So I want to buy 1 Bitcoin and I want to pay, what's the price right now over on G? So right now it's at 88.17. So I may want to buy it at, say, 88.10. And so it would end up down here. And if the prices keep coming down, if somebody sells theirs to me and wants to sell it for 88.10, I would pick it up. So this is where I would buy 1 Bitcoin. I would say I'll buy 1 Bitcoin if somebody wants to sell it to me for 8.10. Okay. If I have a Bitcoin and I want to sell it for 8,900, right? So what would happen is it would put in an order up here. So I would be in the order book here, and it would, if the price comes up and somebody wants to buy mine at 8,900 and does a market buy for 8,900, then I would get 8,900. Okay, does that make sense? And then when I own, I want to do a stop. Now, there's more advanced strategies we're stopping with stops, but I'm going to keep it simple right now. So let's say, for instance, I bought a Bitcoin at 88.44, okay, because I think that the price is going to go up to 8,900. But I want to protect myself, so I want to say if it goes down to 8,500, I want you to sell it. So what I would do is I would sell the Bitcoin that I own. Say I bought one at 88.44, and the stop price would be 8,500. And so what it's telling GDAX is it says, if the price goes down to 8,500, I want you to sell my Bitcoin at whatever you can get. Okay. I'm not going to talk about buy stops. That's a little bit more of an advanced strategy that we'll get into later. But to do just a regular stop, once you buy a Bitcoin or buy a portion of an asset, you want to put your stop sell. You're telling GDAX to sell mine if it goes down to that price because I guessed wrong. Does that make sense? So you got your market order, you got your limit order, you got your stop. A stop really is a market order, but it's happening. It only happens if your price, if it goes down to the price that you're saying you want to stop out at. It actually closes at whatever price they can get. Does that make sense? Any questions? Oh, I got lots of questions. Okay. Let's see what we got here. Christine, I'll talk about BiddyCash system in just a minute. You saw that pop on my screen, didn't you? Okay, we'll talk about that in just a little bit. So any questions on GDAX? And I'm going to just jump over to Bitfinex, and I'm going to show you. Theirs is a little bit more in depth, so I'm not going to go into the details. But essentially, if I would pick say Bitcoin, if I wanted to buy Bitcoin, let's do Litecoin. I'm going to say I want to buy Litecoin. And then I would come down here. I would say I want to buy 1 Litecoin. Current price is $139.71. But I think it's going to come down a bit, so I could just set at 125. If it goes to 125, I will get it. It will end up in the order book down here. I'll see where it is in the order book as it's coming up. And if the price comes down and somebody wants to sell it for 125 bucks, then I would get it. Okay. In this case, I could do an exchange buy, so a limit buy from here, and I can do an exchange sell. Now with Bitfinex, they also offer margin trading. So I can actually leverage the amount that I have in my account, and I can buy more assets. So they do 3 1/3 to 1. So if I have $1,000, I could buy $3,000 or $3,300 worth of assets. And so what I'm doing is I'm actually borrowing the money. The other thing you can do here is if you have extra money on the exchange, you can actually loan it out to people and earn a rate of return, which is pretty decent. It works out to be like 12%, depending on the currency. Some are higher, some are lower, and it always changes, but roughly 12% a year. Just if you had enough assets in here that you weren't using all your cash or anything, you can actually loan it out to people, and it's extremely safe. So it's a really, like on Bitfinex, it's a great way to, if you have Bitcoin, you can be earning interest on your Bitcoin or your Litecoin or even, you know, US dollars that you have in here. So again, if I want to do a stop, or if I want to do a market buy or market sell, I just put in how many I want to sell, how many I want to buy, and if I want to put in a stop, I just put in a stop. I put how much I put in here, and I want to sell it at whatever price, same as the other one. Now, Bitfinex also has what we call stop limits. Okay, so what it does is, like I said before, when you're selling assets, so let's say if I had 100 Litecoin and I wanted to sell 100 Litecoin, it's going to sell it for whatever it can get for it. But I can put a limit on what I want to sell it for. So let's say, for instance, I say if it goes to 125, so if I own 100 and it goes against me, and I say, okay, stop me out if it gets to $125. Okay, but it doesn't guarantee I'm going to get $125. Whatever it can, once it hits 125, it's going to start selling my 100. Now, if there's only 10 Litecoin at 125, and then there's 10 Litecoin at 124, then I'll sell 10 at 125, sell 10 at 124, say sell 10 at 123. So it could go down to, you know, some of my Litecoin I could sell for $100 if the market's going way against me. With a limit, a stop limit, it allows me to say, stop me out at 125 and limit down to 120. If the price goes below 120, then don't sell the rest of my Litecoin, right? So that's something that Bitfinex has, and it limits your, you know, how much it's saying, okay, I only want to sell if the price is within this range. And then they also have what they call a trailing stop. And what a trailing stop is I don't know if we talked about it earlier, I said when you buy, you want to put your stop down here, and as the price goes up, you want to follow it up. That's called a trailing stop, but that's a manual trailing stop. Within Bitfinex, you can put a trailing stop and automate the process. So you can say, what I want, if as the price goes up, I want to be $20, say, away from it. So if the price is $100 for one Bitcoin, then it would stop me out if the price came down to $80. If the price went up to 120, then my stop would also move up, so it's still only $20 away. So my stop would move from 80 to 100. So it would just, with a trailing stop, it follows it up as the price goes up. And then if the market comes back, so for example, if the price goes up to 120, my stop goes up to 100. If the price goes up to 140, my stop goes up to 120. If the price comes down to 130, my price is still at 120. If it comes down to 120, it stops me out. So it's a way of following. So when you have a heavy uptrend, it's a good way of following without cashing in and taking some extra profits. It can be a little bit risky, but that's again, you don't have this on GDAX. It's just on Bitfinex. So if you're not using Bitfinex, then it's really irrelevant. So, but for people who are on Bitfinex, I want to let you know that as well. And so we have, so those are the main things on Bitfinex. And I'm not going to, these are more advanced. I'll get into that if I know people are using that, but we're not going to talk about that today. And then finally, I'm going to log into Binance. And my machine's going a little bit slow. Because I think a bunch of you are on Binance as well. So I'm going to pull this up. And let me log in. And I apologize for this being a little bit slow, guys. There we go. I have no idea what my passwords are. I have them all in LastPass. I kind of think this is kind of cool. I've never seen this before. Let's see if I... There we go. Okay. Oh, shoot. I'm really security conscious, guys, so... let me just do this here. And that's changing on me. All right, here we go. All right, so let's go over to the exchange. I'm going to go to, and I'm new to this platform, so you guys may probably know this better than I do. So I am going to, I'm not really a fan of it, but it works with their advanced. Again, you can put some indicators on here. It has a MACD on here. It has a moving average on here. To be honest, I'm not sure what moving average it is. And then you have your order book. Again, you have your ask, you have your bid, and then you have your orders. Again, they have a stop limit as well. But again, you have your limit order. They use USDT, which again, you can think of it as US dollars. So if I have, say, so I'm on Ether right now. Where am I changing this? Oh, here, up top here. So if I want to change the currency pairs, let's go to Bitcoin. And you can see, even though it's USDT, the price is very similar to like Bitfinex and GDAX and stuff. So if I'm going to trade, say, Bitcoin, and I have, if I want to sell a Bitcoin, I put in how much Bitcoin I want to sell and at what price I want to sell it. So it's a limit order, same thing, works the same thing. So what I want to sell it for, if I have enough USDT in my account and I want to buy Bitcoin. So for example, if I sold it for $9,000, and so that means I have $9,000 in my USDT account, I can now over here buy $9,000 worth of Bitcoin, but I have to put in here how much Bitcoin I want to buy and at what price I want to buy it. Right, so you do your buy Bitcoin, buy it here on a limit, sell it here. You got market buys, so you just put how much you want to buy at the current price. I'm not sure what these are. I'm not sure. Again, I'm fairly new at this as well. Market, you want to sell your Bitcoin at the current price, whatever the current price is, whatever the exchange can get for it. And then you have your stop limit, which works the same as Bitfinex. So you have a limit that you can sell it on. So market, limit, stop order. And I'm not going to spend too much time on this. If you guys want me to go into more detail another day, give me a little bit of time so I can get familiar with it. But I just wanted to show you the orders today anyway. And I think that's it. And I want to open it up to Q&A. I want to pop over to here. And I want to see if you guys have any questions on what we talked about tonight. Let me open this up. Yeah, I like to look at GDAX as well. I really like Bitfinex. I'm a proponent of Bitfinex. So, yeah, the trailing stop, Christine. Yeah, you don't have to stay and watch it. You can, you're going to get stopped out, but you also know that you can maybe make some potential profit as well. maybe more than what you normally would. So I don't even know if we still have everybody with us, because I know I went a long time. I hope it's not. Yeah, it still got you guys here. Thanks for staying so long, guys. I appreciate it. I know that I talked forever. Hopefully you guys got some value out of this. And I think all of you guys are here. I think we just lost one person, which is not bad. So any questions about what I went over? Any questions about candlesticks, about the candlesticks training, about highs and lows and opens and close? Next week, we're going to actually go into a little bit more price action. We're going to be talking about support and resistance and how to use them, how to plot them, how to figure them out, how to use them to actually generate buy and sell signals. And so what I want you guys to do, you know, for the next week or so is get your TradingView set up. Any issues, ask in the Facebook group. I will look at your questions. I'll jump in there and answer what I can. If I need to, I'll put a video together to answer your questions. But it's important that you guys get a lot out of this, and it's important that you guys, you know, start learning how to trade and start making some money. And then we're going to start getting into, you know, what to look for, looking at some signals, all that kind of fun stuff. So that's what we're going to be doing over the next couple of weeks. So if there's no other questions, we did go a long time. It's like 2 hours and 15 minutes. Wow. I am, if there is nothing else, then I'm going to call it a night. Oh, BiddyCash, Christine, BiddyCash. Do you have the Telegram bot that Jeff put together? You should have got a message in there. He actually sent it through. Actually, you know what? I'm going to pull it up because I saw that message come through. And that's what he was working on. That's why he couldn't jump in today, is he was putting the finishing touches on. And his bot is actually, he developed this himself, and the bot is actually really cool. I really like this. So it should be in your bot, the BiddyCash Weekly, exciting news, new BiddyCash 2 system just went live. You will need to immediately log into BiddyCash back office and then invite. So he's made some changes to it. So log in, check it out. You can look at, you'll get the message here and start moving. You can actually upgrade from here as well. And you can actually see your team. It's actually kind of cool what he's put together. Yeah, actually the steps have changed, Christine. So you may want to jump back in. You may have to redo everything because now we're going to be tying this into like Cryptopia, and we're going to be doing some small cap coin recommendations, and we're going to be doing it on Cryptopia, and I believe we're going to be doing it on HitBTC, and then long-term strategies we're going to be starting to integrate with like the bigger exchanges, but we're going to start doing some low cap, some really cheap coins. We're going to be doing some research on coins that we're looking to get into early, and charting those out as well, which is going to be a little different than what I'm teaching you guys. What I'm teaching you guys is to kind of teach you guys how to fish, right? You know that saying that says, you know, give a man a fish and you feed him for a day, and you teach a man to fish and you feed him for a lifetime. What I'm looking to teach you guys, and especially the one-on-one people, the ones that I'm doing one-on-one sessions for, is, you know, once you learn how to trade, it works whether you're in cryptocurrency, and I've talked to my students about that, whether you're in cryptocurrency or Forex or stocks, the fundamentals, the technical analysis is all the same. And so, you know, that's my goal, is to teach you guys to be self-sufficient, and the people that are experienced, because I know we have different variations of experience level. The ones that are more experienced, I'm hoping that I can validate, you know, what you guys are looking at, right? If you guys are questioning maybe a decision on a buy-in or a sell, you know, I'd love to be able to, you know, help you make that decision. And, you know, if you're just looking for some validation. So Anyway, lot to learn over the next few months, next few weeks. Lots going to happen in this cryptocurrency market. It's up in the air. Lots of money to be made. Trust me, there's lots of money to be made in an up market and a down market. If you know how to play the game, it doesn't matter if the market goes down and goes against you. You're going to make money because you're going to learn how to do that. So if there's nothing else, guys, I'm glad you guys stuck with me all this time, and hopefully you guys got a lot out of this, and I look forward to talking to you guys next week. So if that's it, you guys have a good night, and we will talk to you later. Take care, guys.